Check in with Benjamin Tal, a deputy chief economist at CIBC Capital Markets. Benny, always great to have you with us. And I guess one place I want to start is $9 billion is the money that the government set aside this week to help students. It's a massive number. And I guess I actually, before we get to kind of the plight of young people in all of this and post this pandemic, which is serious, these big numbers keep passing us by. Should we be paying more attention to that? Because that's a pretty big chunk of change, $9 billion, and we kind of reported it and it's gone. And nobody's sort of saying, wow, that's a lot. What's going to come out of that number?
Yes, it's a lot of money, and more is coming in other programs. So just the down payment, and we're talking about already $250 billion. The issue facing young Canadians is a significant one, and $9 billion is really a surprising number. I didn't expect so much. So they mean business, but this is really the case with the government and the Bank of Canada in this crisis. They're not going baby steps. They mean business, and to really go with big money to make a difference. And yes, I think more is coming, especially when it comes to small businesses. So I think it's a move in the right direction. How we are going to pay for it, of course, it's another issue. And the debt to GDP ratio will have to go down. This means that eventually in the future, we'll have to do some major savings. And ironically, some of these savings will be at the expense of education.
And of course, a whole cohort of young people are going to face a difficult economy here when we come out. Some just trying to graduate, some new to the workforce, some in precarious employment before we got into all of this. How worried do we need to be about people who are just trying to get their careers going, facing the kind of recession with all its uncertainty that we're looking down?
Yes, that's a good question. And they have to be worried. We have to be worried about it because this is not a good environment in which you want to start your career in. Clearly not. And as we discussed in previous conversations, this is not going to be a V-shaped recovery. So over the next year, I see what I call a zigzag economy. You know, we'll have up and down, because there will be some other wave, second wave or third wave of this virus over the next year. And then we'll have a vaccine and we will be graduating, recovering into this kind of recessionary conditions. This is a long period of time of 2-3 years in which the labor market will not be a very welcoming place, especially for young Canadians. So what do you do? In some cases, and that's the most risky scenario, is that you compromise on a different job. And there are thousands of research papers telling you that your first job is crucial in determining the trajectory of your career over your lifetime. It will take many, many years to undo this change. So what you do now out of desperation can impact you 20 years from now because of the trajectory of your career. You didn't start where you're supposed to be starting. You compromised and you were overqualified for something, and then that's where you're going. So that's a risk for the economy as a whole in terms of productivity, and of course, at the micro level, in terms of the standard of living of those individuals. So I think maybe there will be some sort of temptation to do so. That's risky. The alternative, which I think is a better alternative, is to basically upgrade your skill set, change your skill set, and the education system has to be flexible enough to accommodate those new graduates to basically upgrade their skill set in a way that is more practical and more consistent with what the economy needs now. That's the way I see the situation.
So then on that front, Benny, I mean, one of the things we should be thinking about, presumably, as we look to not just reopen the economy, and I do want your thoughts on that, but to help restart. In other words, the stimulus that would come not because we're facing a global pandemic, but because we're facing a recession, and the government can then direct sort of stimulus money as it will to help us get past a recession. How can it be focused to help those younger people, the people that are starting out? Should it be on the education side? Is that the right investment for us?
Yes, I think that education is key, and we have to think of different way we educate young Canadians. I've been very vocal about it before the crisis. I think that as a society, we are failing young Canadians. We are failing them. The labor market is changing at the speed of light, and the education system is behaving like nothing happened. We need to really change education in a way that is much more practical, so you don't have a very high unemployment rate and underemployment among extremely educated Canadians, because the field of study is inconsistent with what the economy needs. Now we have to accelerate this process and make sure that those graduates that are going to compromise on a job that is below their skill level will actually have the potential to upgrade their skill set in a way that is more consistent with what the economy needs, and therefore raise their probability of getting a job. So education and changing education and thinking about education is very crucial at this moment.
Do you have a view? We're seeing a five-phase reopening plan from Saskatchewan today. We know from the federal government that this is likely to go province by province. We'll all have slightly different attacks here. But what is the right way to reopen that does balance properly? We can't go, zero risk on the healthcare front, if we're honest, in terms of at the expense of the economy. At some point, you kind of have to saw it down the middle and say there's still risk, but it's risk that we're going to take.
Absolutely. And the way I see it is, again, going back to this zigzag economy. That's the way I'm going to see it, because we will have to live with this kind of environment, realizing that it's happening, and be ready to turn it off on a short notice. So you start opening up, you start with clearly, but you have to do it in a smart way. For example, take older people with precondition, they will be asked and told to stay home, which makes sense. Also, office people, banks, financial institutions, insurance companies, people who work from the office, they will be asked/told, keep as many people as you can home, working from home. We know that you can do it for a while to minimize the numbers. So be smart about that, but also be smart about how you start the economy. For example, infrastructure. The temptation would be to start infrastructure immediately because that creates jobs. And I would say very careful. First of all, the timing is important. You don't want to start when, the economy is just recovering now. Second, you don't want to compromise on short-term demand at the expense of long-term supply. We need long-term supply. Don't spend and waste this infrastructure money.
Okay, and then finally, Benny, and I have a feeling I'm going to keep asking you this every time we talk, but when we say $9 billion is a lot, we are spending, tens and tens of billions of dollars here. By some counts, I guess, $220 billion in new spending since this all began. When do we start to kind of measure the cost of that? We begin to see these headlines about Canada getting a downgrade. We know we may still have the best house in the neighborhood, but the neighborhood's falling down. So when do we start to worry?
Yes. First of all, I think that we have to think differently when it comes to budget deficit in this environment, because really we have never seen something like that. And we need to buy the time that we need to buy to get to this vaccine and to the end game. So we have to rethink budget deficit. Second, the issue will be not now. The issue will be the long-term consequences of the budget deficit now, which means that in order to lower the debt-to-income ratio, you will have to have basically zero deficit after the crisis is over. There will be some major casualties. One of them is, of course, the environment. I think will be the number one casualty. I think that education will pay a price. So we will see some major casualties, unfortunately. And you're right, we have to make sure that we are not wasting money. And that's why I've been so vocal about helping small businesses when it comes to rent, because now, in my opinion, some of the effectiveness of what we are doing now is being reduced by not dealing with other things. For example, the wage subsidies. So yes, we have to spend fast and quick, but we have to be smart about it. At this point of the game, I'm not sure that all the programs are as efficient as they can be.
All right, Benjamin Tal, great to have you with us. Always appreciate it.
Thank you very much.
Benjamin Tal is Deputy Chief Economist at CIBC Capital Markets.